So we had a very weird move this morning with Rigetti. It opened up down 10%. We're patting ourselves in the back, and now it's up 10%. Yeah, I covered some down, and I just shorted some. And when I say some, I mean a lot. We'll see how the rest of the market reacts. NVIDIA's down, which kind of is telling. I wanted to call that pain. I guess you didn't. It was 8 2 days ago. Then it went down to 7. Now it's 8, higher than 8 now, but it's, I don't know. I think it's going to go right back down. It's not too painful. I mean, 𝗓𝗏𝗃, if you're just short Rigetti, that's one thing, I guess. But if you're also short 𝗓𝗏𝗃 and D-Wave, it's super weird. You know, it's like big dip down to 680, rallies back flat for a few days. Big dip down to 720, rallies back. Probably will be down pretty significantly if you ask me, but we'll see. General trend has been pretty abysmal. So if you're short this chart and you think it's pain, I don't know. That doesn't look like pain to me. The rally is weird. I agree with that. It's not welcome, but yeah, occasionally there's some rallies. Here's another one. I covered some 𝗓𝗏𝗃 just for more margin to short Rigetti because at least 𝗓𝗏𝗃 was down, but up 8%. It can't resist. Nice tracks. Yeah, some of us played it perfectly. Some of us didn't. I mean, the earnings were not good. And I think the CEO did a good job of explaining that their revenue is basically meaningless and you shouldn't look at their revenue, which if you're that should be bad news if you're a bag holder, but you could also consider it good news in a way, because it's like, okay, now I don't even have to worry about missing earnings or meeting earnings, right? Like for cassava, it had its best time when the facts weren't relevant. There's no facts. That's great. You know, I'm pre-revenue. It's when facts come through that you have to be worried if you're a retail shareholder or a bag holder of Rigetti or 𝗓𝗏𝗃. You don't want any facts. You don't want any realness because your fantasy, your fairy tale goes away. The 100-bagger fairy tale goes away. So when he says we have $2 million in revenue, instead of that being the normal bad news you would expect it to be, it's sort of like, okay, we don't have to worry about revenue. Great. This isn't the real business yet. The real business comes in 5 years. Of course, in 5 years, he's going to say the same thing. So I didn't know, honestly. I thought maybe it was all over for Rigetti and we wouldn't get another pump, but here we are. I mean, you know, with the volatility, you kind of be crazy not to trade a little bit. I mean, you guys hear me every minute, order filled, order filled, order filled. You know, I'm trying to take advantage of the 5 cent, 10 cent moves. I mean, Rigetti moves 1% every minute. Think about that, 1% every minute. Most stocks don't move 1% in a day. I don't know what happened this morning. I almost feel like it was a fat finger or something like that, but could be anything. And maybe part of that is their ATM, right? Whenever you have an ATM, I mean, that's really
order partially
dangerous
filled.
Because the ATM's in there with
Order
VWAP.
filled.
And it's trying to
order partially filled.
Just participate with VWAP, and
Order
it's just going to
filled.
be an extra weight on the company, and that's why, on the stock, and that's why, you know, like
Order
𝗓𝗏𝗃 is
partially
up
filled.
today. And it's very
Order
well
filled.
possible, you know, the VWAP in action. But yeah, I mean, I would short Rigetti up here. This is a good trade. Draws in the bag holders who think it's not all over. And this draws in a couple of weak shorts. That'll last about an hour or two. That's my guess. Doesn't help that the market's weak too. I
Order
would be
partially
shorting 𝗓𝗏𝗏𝗏.
Order filled.
Technical analysis isn't too useful, but if it helps you, let it help you, you know. It creates discipline for traders, which they otherwise normally wouldn't have. So if you can follow the discipline, that's always good. So the basic idea is, the basic idea of TA is trend following. It's funny, it's like a mix of trend following, a mix of mean reversion, you know, definitely stop losses. You're kind of getting a lot of ingredients of a good trading system. If you're a good trader, that kind of stuff will work. I mean, you basically have a stop loss risk management system. That's 90% of trading. You have a way to get good trend following, which is what they call, I think, breakouts and breakdowns, right? So that's trend following. Then you have mean reversion memes as well, like head and shoulders or bouncing off support or whatever. You know, those types of things are mean reversion, you know, weak mean reversion ideas. So like, it kind of works, you know, in terms of, you know, you have the ingredients. Is there some foolproof way to implement it? Of course not. It's hard to do the synthetic short if there's no, I mean, I can do that too, Teddy, yeah. If there's no shares outstanding, borrow, there's no borrow available, yeah. But when something's hard to borrow, I mean, it's usually actually pretty bearish. I mean, think about it. If people are fighting to short your stock, that's not a stock you necessarily want to be in. Oh, we don't have a Walmart model. Johnson & Johnson, of course. LVMH, we should probably do as well. Palantir is the 41st biggest company in the world. Isn't that wild? 41. Bigger than Wells Fargo, bigger than Cisco, bigger than IBM, bigger than Novartis. I don't think IonQ's a buy at this price, no. But it's not as good of a short as Rigetti. I mean, IonQ kind of has something to spin now, whereas Rigetti isn't even pretending to spin. They're just like,
order filled.
Nothing's happened in our company for years. Their business strategy is, I pray the government will fund us. Yeah, John, I mean, I think, sometimes when stocks have been pummeled so much, that's, that does happen, but I agree that it's a little strange. All right, why don't we look at Walmart? No, I don't think anybody would want to acquire Rigetti for this price. There's just no obvious reason to when the machines don't work. Like, if they had a promising machine that was going to work, then I have heard a rumor from my sources that there is a new type of computer coming out later this summer that actually does work and has millions of, well, they're not called qubits in this case, but they're special bits that are, think of them like qubits, I guess. They're more powerful than regular bits. So no QPU is going in a notebook anytime soon, unless your notebook has liquid nitrogen, $100,000 laser beams, and your notebook needs 9 qubits when you could simulate more. So anyway, yeah, I do have it's a private company. Take it with a grain of salt. Might not happen. I don't really know Organogenesis, if this is the same company I was short, the 3D printing of organs. Is that the company? Yeah, I mean, if you need a lot of capital, being public kind of makes sense. There's nothing. Oh, yeah. I don't know these guys that well. Sorry. I was thinking of Organovo. That was the one I was short for many years. Organogenesis is a little bit more real. Yeah, I can't share the company's name, Ryan. I think you may probably know it, but I'm told there is a breakthrough coming. We'll see. It's not IBM, no. It's not in quantum. It's not a quantum computer, but it would be the quantum killer. Yeah, you don't need profits to forecast a company. Most of the stuff we look at isn't profitable. Yeah, I can short Rigetti, and I don't have shares available for Rigetti, but I do have a massive amount of calls I can sell. All right, let's look at Walmart. Odd business here where, it's not that odd actually, but only thing I'd say that was odd, the point I just saw was their membership income, which I'm guessing their membership income is really, really high value. That's Sam's Club. Any of you guys in Sam's Club? It's got a lot like Costco, right? You have to pay to be a shopper. It's kind of nuts. I'm not going to play the guessing game, Darren. And what's the point of paying to be a shopper? Again, I'm from New York, so... Right, but why are you paying to be a shopper? It kind of doesn't make a ton of sense. It's just sort of, you're still a retailer, right? Why don't you pay to go to, Best Buy? Or I get that they do it. That I am clear about. The question is, how do you sell that? Keeps out the riffraff. That's fair. You can look up down your nose at anybody. You feel proud that you're in there. Okay, Brady, yeah, that makes sense. You can command that price because other people can't. What's the cost of a membership anyway? Now I'm getting FOMO. Oh, I see. So no EBT. It's very cheap. I see. Almost no theft. Yeah, that makes more sense. Man, I go into the CVS and I just know who's about to rob it. I look at him like, yeah, boy, I see you. I'm gonna help you out. Hold on.
Order filled.
Toothpaste sells well. You put that right back up on eBay.
Order filled.
Pure profit. Why are they allowed to make all this gross margin? Why can't I make gross margin? Why can't I make a little gross margin too? Everybody's studying these numbers, talking about gross margin. Where's my gross margin? But you get 10, 20 tubes of toothpaste, baby.
Order filled.
You're eating good for a week. We're launching futures either this week or next week. Real-time futures for you folks. I can't wait. Formula and diapers. Oh, that's good money. I don't know what mother buys formula and diapers off of eBay, though. But maybe you saw it in the hood. We don't have bonds coming sooner than commodities and futures come first. They refer to our operations as shrinkage. That's because their profits is shrinking. Get some liquidity and short some Rigetti. That's it. Depending on how fast, if you really do think it's going to go down, you can add to a loser if it's going to plummet. That's how strong it is too. Yeah, I don't know what people are doing on Rigetti. I do think some bag holders are looking at this as like some kind of like message from God that this is the stock they should be buying. But
order partially filled.
I also think there's probably some weaker shorts covering that are scared. Look at the momentum for the last month. It's not about to reverse over.
Partially filled.
Yes, could it go to 10 or 11? Yeah, sure, of course. Stocks can go to any price. That's just nature of the market. But
order partially
probably
filled.
I wouldn't think it would. I don't think it's pumping because there's no shares to short it. I mean, any sophisticated player can find a way to short it. Yeah, there's just borrow missing on one brokerage. That's not really that relevant anyway. But yeah, I mean, those dislocations matter on the margin, but I think Walmart is $10 billion. I'm telling you, they can afford it. 63 billion inventory.
Partially filled.
116 billion PP&E. 82 shares outstanding. So 775 billion market cap. They've really kept up. I remember when Walmart was a 200 billion market cap. Just owning Walmart shares would have done you fairly well. But we can also look at things like return on tangible assets and whatnot for Walmart, because that's pretty important. It's a real business. I mean, you kind of even if you're gonna do biotech for a living or software, you know, it doesn't hurt. It kind of doesn't hurt to look at real companies, because it reminds you and grounds you of like, okay, this is how the real world works. You know, there's capital. That capital is the basis for the return. You can't have a return without capital. That's the old way of looking at things. Obviously, that way has been that line of thinking has been destroyed, right? I mean, one, you could outsource your capital needs. Two, there's goodwill. But, you know, we used to live in a rational, non-Veblen world where any Veblen good would be competed out. But the wealth of nations has resulted in Veblen goods not just existing and not just persisting, but flourishing. And the Veblen good, where, you know, you can buy Starbucks coffee for 10 times what it costs to make. Yeah, we can look at the CoreWeave. Veblen wrote a book. This is the guy, Thorstein Veblen, old economist, and theory of the leisure class. What's amazing is it's 100 plus years old. The term conspicuous consumption, right? You want to be conspicuous when you're wearing your Hermes bag. Keeping your Hermes bag in the closet doesn't do you any good, right? I don't think cities are, because cities aggregate work. Veblen goods are status symbols, whereas there are other types of goods that, I mean, you could argue drugs, for example, are the Giffen good, not a Veblen good, but you know, it all breaks down back to elasticity. But the Veblen's special because it has the value in the signal. So what were we talking about? Yeah. So I want you to think about this in the framework of capital theory and investing theory. You know, I talked to you guys a little while back. Every now and then, if you pay really close attention, and I mentioned that, you know, this is kind of like an advanced lesson or whatever, I talk about PP&E a lot as like, as you guys may have heard me say, is the soul of business. You know, your capital equipment is what's supposed to allow you to have a margin, right? I want you to think back to the 1800s, where you either were a laborer or you owned equipment, in essence. This is when they say the means of production, right? This is the Marxist idea of the means of production. Own the means of production, or you are the means of production. So when you see companies like MongoDB or Pfizer without any property, plant, and equipment, or, you know, maybe not Pfizer exactly, but you know, any biotech company, very little property, plant, and equipment, and they're making gushers of cash, there's something that has to explain that. Now, in the case of the drug companies, there's some monopoly that's happening due to some law. In that case, the law is, of course, called a patent. And then if you're looking for, you know, say, I think the biggest thing was Coca-Cola. Why isn't Coca, you know, I think to a young Buffett, the biggest question was, why, how can Coca-Cola do what they're doing? Right? Coca-Cola has this enormous return on capital. Doesn't cost much to make syrupy concentrate. And they don't even make the bottles or do the bottling. That's another company. So they just make the raw syrup and sell you the syrup. Somebody else puts it in cans and adds water and carbonates it. And so Coke just, you know, prints cash, and you could replicate all Coke for very little amount of money. And the meme, there used to be the old meme about their secret formula. Well, you can make the Coke that tastes identical to Coke with modern science. Maybe 50 or 100 years ago, there was a secret formula, but today, there's no secret formula. When I was a kid, used to hear about the secret formula all the time. It was a bit of a legend. Today, people don't really talk about it anymore because they know it's a meme. Because you've tasted other colas that taste the same, right? So, there's no secret formula realistically. But in any event, if you think about why is Coke allowed to do that, it really gets back to the brand. And Buffett studied that really carefully, as should you. And again, I go back to the chess analogy because it's the only one that feels comfortable for me. As a kid studying chess, I read the book My System, which was thought to be one of the best chess books ever written. But then I read 𝗟𝗏 writing a foreword to it, to a modern edition. I read that relatively recently. The modern edition wasn't available back then. But Yasser Seirawan wrote this forward, and he said, when I was reading My System, I disagreed with a lot of it. And I read that, I said, I agree. There's a lot of My System that's kind of outdated. It was written 100 years ago. Chess theory was not as well developed as it is today. The meta of chess has shifted quite a lot, just like any other game. So, and for what it's worth, I do think it's very good to study games in general, and I'll tell you about that when it comes to Renaissance sometime. But in any event, when it comes to chess, Yasser said that the book was really valuable to read because it made me think about chess. And I think that the stuff I'm telling you about, like I said, you may never actually invest in GM or Coke. One is capital light, one is capital heavy, right? Capital intensive or capital non-intensive. And, anybody can start a car company. The problem isn't really the brand. There's some people that like, Corvettes, and there's some people that like GMC or whatever it is. But in general, cars are kind of, it's not hard to get demand for a car. It's kind of hard to stay in business with all that capital equipment required. Car plants, billions of dollars. So you can't just start a car company. You can start a software company tomorrow. AWS has a free tier, for crying out loud. You could make your computer a web server if you wanted. But, you can't really do that with a car company. You probably can't even do that with a cola company. But it's a lot cheaper to start a cola company and replicate Coca-Cola. But you're not going to sell very well because the brand that they built over many, many years is very valuable. Now, sounds obvious, right? But it's not so obvious when you look at other companies like Stryker. Do doctors really care what surgical tools they use for hip and knee replacements? A little bit, but not that much. I think that when you look at orthopedic companies, you're going to see that there's something very weird there because there isn't much of a monopoly from a regulatory perspective. It's actually kind of easy to get some of those hip and knee replacements approved. But they just make a fortune for some reason, despite the fact that they have very little capital. When I say capital, I mean capital equipment. I don't mean cash. So where is that extra return coming from? Because you, as a business person, have a choice. Say you got $1 million, whether you inherited it or you follow my cassava advice, either way, you have $1 million. You have a choice. You can go to your bank and buy 6% bonds, okay? You can go to, buy the SPY ETF and you think maybe you'll make 8%. You can buy a small cap ETF, maybe you'll make 12%. But what if you buy a plant? Now, let's look at Walmart. If you said, well, I want to recreate some of Walmart. Well, it doesn't look like a great deal. It's an okay deal because let's say this quarter you make about 4.7 billion, right? We'll multiply that by 4. So for the year, you would make 18.9 billion. And if your property, plant, and equipment costs 117 billion, your return is 16%. So that's higher, right? That is higher technically than any of the alternatives I listed. And it won't be hard to find a publicly traded company that has that same, a much higher return, 20% or 30% or 40%, 50, 100, et cetera. And the question is, well, why can't I make that money? Well, in the case of Walmart, you probably could open a retailer tomorrow. You probably, if you had $1 million to spend, you probably could open a little retailer. And with enough blood, sweat, tears, and heart and soul, you probably could make 16% a year. And that's 16% every year, mind you. Now we have to look at the capital equipment requirements, but that could be a very good return. Now you can get your money back, depending on how much this grew. How long would it take to get your money back? Well, 16 times 7, right, is roughly, 6 or 7 years, basically. It's really 6, right? 6.5 years, you got your money back. That's a pretty good deal. Now, you don't know, of course, there's lots of risks in starting a business. So you have to discount that cash flow quite a bit. So the numbers may be a little different. But the point is, what I want you to think about, which is kind of one of the most important lessons in business, is that the decision between investing in a security and investing in capital equipment is theoretically fungible. And that's something that very few people appreciate. That's mostly because we get pigeonholed into jobs where that's the viewpoint. I mean, you're sitting on a trading desk. Nobody wants to hear this. We're here to trade, right? But I think that if you're sitting at, we actually heard this yesterday. I was actually really impressed from Sanofi. Not Sanofi, actually, the Biogen CEO, who was the CEO of Sanofi. Fungible means the same, interchangeable. You can swap it for something else. It wouldn't make a difference. $100 bills are fungible. Your $100 bill isn't any better than my $100 bill. NFTs are non-fungible. So in any event, I think that, that's the problem is to Buffett and to somebody growing up in the 60s, selling sugar water for $1 that costs 5 cents to make is very bizarre. And, the country got really rich. So that was a Veblen good. Today, we don't look at it as a Veblen good. We look at it as an obesity prescription. And what is a Veblen good has changed. Signaling value will lead you to have this huge increase in capital returns, better than the stock market, way better. But how do you get that? It's not easy if you can get it. That's why celebrities do tons of endorsements and stuff like that, because it's sort of like this huge return on nothing. They have this intangible asset, this goodwill. They don't have a piece of property or plant or equipment, but they do have their name. And if they can use their name to endorse a product, it's a way of getting returns on their capital, their social capital. So capital can come in all types of forms, but the traditional way of looking at it, which has obviously changed a little bit, is you basically, again, from the maybe even before the 1800s, but since the dawn of the corporation, if you don't have property, plant, or equipment, you're not getting a return. You're going to be working the property, the plant, or the equipment for somebody else's return. Again, there's very kind of capitalist, Marxist, socialist ideas of, capital versus labor. This is an eternal battle, according to these economists, that there is a battle between labor, who says you wouldn't have your profit without me, and the capital, who's the owner of the capital, advocating for the capital, saying, well, I can't make my profit without the capital, and I deserve the profit, not you. And the union movement, which is largely dead, but the union movement attempted to preserve the value, which is sometimes called the labor movement for that exact reason, tried to preserve the value of labor. Now, of course, we see more and more automation, labor is less and less necessary, and those intangible assets, like brand, have become more important than capital necessarily. When we talk about the death of manufacturing in America, this is what we're talking about. So probably for a good chunk, equity value out there, we've basically said that the value comes in it being hard to make this kind of thing, it being hard to distribute this kind of thing, it's hard to get a brand and a reputation for these kinds of things. Those are the things that stop you from being able to replicate Salesforce.com. Right? How many CRMs are there out there? Millions. But they, for better or worse, they have the best CRM, and they have the most marketed CRM, and all kinds of other things that enable them to be a $200 billion company with probably, $5 or $10 billion of capital equipment. Yeah, I just want you to think about that framework, because it really is a rare one to use.